Before the markets close, you'll gain insights from top financial experts that could change your investing game.
That's right. We've distilled hours of complex analyses into actionable takeaways, giving you the edge in navigating this crowded market.
Who are these experts?
Experts like Jason Shapiro and Jeff Snider share powerful insights into understanding current market conditions.
But stay tuned. One of the most shocking revelations? How political tensions are influencing oil prices. Don't miss it.
And remember, this video empowers your financial decisions. Knowledge is your best asset.
Let's dive into today's insights, starting with Jason Shapiro's predictions for the trading year ahead.
Your expertise awaits. Let's discover how you can hit the ground running.
Quick reminder, this content is for educational purposes only and not investment advice. Welcome to our summary of Jason Shapiro's insights on trading strategies at the close of 2024.
Shapiro emphasizes the importance of understanding market dynamics to find trading opportunities.
Shapiro's core message highlights that grasping crowd psychology is crucial in trading.
He explains how membership can provide insights for predicting crowded conditions.
Building a trading strategy is anchored in recognizing the psychological behaviors of market participants.
Shapiro points out that these weekly reports serve as vital roadmaps for traders.
So, they assist in keeping traders disciplined by revealing crowded markets.
Precisely. They direct traders on where to focus their activities.
Shapiro asserts that the community aspect of Discord adds tremendous value to trading.
It's not just about his insights. All members enrich the conversation with their perspectives.
So it becomes a collaborative learning environment rather than just one-sided advice.
Absolutely, it transforms personal growth into shared progress.
Shapiro highlights the effectiveness of proprietary indexing in identifying crowded trades.
What sets these indexes apart from others?
They integrate extensive backtesting with real market conditions for valuable insights.
He covers the different membership tiers that accommodate diverse trader needs.
This flexibility allows even novice traders to access key insights without excessive costs.
It aims to foster well-informed traders making educated decisions, correct?
Exactly. Building a knowledgeable trading community is the goal. Shapiro anticipates diverse market conditions as 2025 unfolds.
He stresses that comprehending crowd behavior will be key in addressing these scenarios.
So traders must be proactive and agile in their approaches.
Exactly, readiness is paramount.
In summary, Shapiro underscores the importance of crowd awareness in trading.
He encourages utilizing community insights and flexible membership plans for ongoing growth.
That's a motivating message for those wanting to refine their strategies for the coming year.
Absolutely. Striking a balance between personal learning and community input is essential for success. Today, we're diving into the distress within the auto industry, as highlighted by Jeff Snider in his latest analysis.
Indeed, Snider emphasizes that recent data shows new orders crashing and shipments declining sharply, a true sign of an industry in crisis.
Snider discusses how expectations for recovery after the pandemic led to rampant investment in production capacity.
That's right. The reality is stark. Demand simply hasn't materialized as anticipated.
Exactly, and this overcapacity is forcing cuts across the board. The auto business is a clear microcosm of our overall slowdown.
Jeff Snider points out that the ISM index's drop in December signals more than just seasonal fluctuations.
So it essentially confirms a nosedive in consumer demand.
Absolutely. It reflects a pervasive sentiment that the market is shifting heavily.
Snider emphasizes that manufacturers miscalculated their recovery trajectory, leading to current overcapacity.
And it feels like a cascading effect, right? If one domino falls.
Precisely. It creates a ripple that affects workers and suppliers at all levels. It's interesting. Snider mentions that consumer reluctance towards electric vehicles signals a deeper disconnect.
So, is it about affordability or just lack of interest?
Both. Consumers are feeling the pinch and aren't as enthusiastic about costly alternatives.
Snider predicts we're likely to see more layoffs across the board in the auto industry.
Yes, and this is indicative of cyclical issues in the economy as well.
I wonder how long this could last. Will there be recovery?
If current trends continue, a full recovery seems unlikely in the near term.
In conclusion, Snider's analysis provides crucial insight into the ongoing auto market adjustments.
Absolutely. It's clear that understanding these trends is vital for businesses and consumers alike.
Today, we dive into the analysis by Nick Gerli from Reventure Consulting, who highlights the dropping home prices in Texas as we approach 2025.
Gerli notes that the market is currently volatile, particularly in cities like San Antonio and Dallas, where inventory has spiked along with other regions.
Gerli's core thesis is that an inventory surge is leading to declining prices in Texas's housing market.
He details how inventory has tripled in San Antonio and surged significantly in Dallas, pointing to the most substantial supply levels in a decade.
This abundance of homes for sale gives buyers more options, but forces sellers to adjust their pricing.
Gerli highlights that in San Antonio, home values have decreased by 2.4% over the past year due to an inventory spike.
With 12,000 homes on the market, that's a significant increase, indicating a shift towards a buyer's market.
Looking ahead to 2025, Gerli predicts that Austin is likely to see continued price drops driven by excess supply.
Prices have already dropped by 19.1% in Travis County, creating ongoing pressure in the market.
In conclusion, Nick Gerli's insights stress that understanding local inventory trends is essential for any home buyer or investor.
Being aware of market conditions can assist in making better buying decisions, especially in an unpredictable housing market like Texas.
Today, we're diving into the complex interactions between global politics and oil markets with Doomberg, a renowned analyst from the Doomberg Substack.
Doomberg provides insights on how current tensions in the Middle East impact oil prices and how the political landscape is shifting.
Doomberg argues that while geopolitical tensions are high, especially with Israel's actions in Yemen, oil prices aren't responding as expected.
He explains that the current market conditions are largely oversupplied with oil, meaning that a little conflict isn't enough to shake the prices significantly. Doomberg explains that OPEC manipulates production to keep prices at a certain level. Currently, they aim to prevent prices from falling below $70 a barrel.
Seems like a balance they have to maintain.
Exactly. Doomberg predicts that eventually this arrangement will falter, leading to a significant drop in prices.
Doomberg emphasizes Trump's plans to boost U.S. energy production by an additional 3 million barrels a day.
This would represent a substantial increase, changing the game for global markets.
And what does this mean for U.S. geopolitical interests?
It suggests a pivot towards focusing more on Western Hemisphere resources.
Looking forward, Doomberg suggests a shift in the energy landscape if Trump's policies take hold.
That's right. The global energy supply could see significant changes, particularly if the political climate stabilizes.
Geopolitical factors will continue to influence these markets.
Indeed, it's something investors must monitor closely.
To sum it up, Doomberg's insights illustrate the intricate dynamics at play between energy markets and geopolitics.
Indeed, it's about balancing policy, market responses, and global events.
Understanding these is crucial for any investor in today's shifting landscape.
Today, we're exploring Ed Dow's perspectives on the U.S. economy, elaborated by George Gammon.
Dow's observations on government spending and its economic implications are quite striking.
Ed Dow emphasizes the alarmingly high U.S. deficit, now around 8% of GDP. What does this suggest?
Dow contends that elevated deficits without a significant crisis signal potential economic issues, especially when forecasting a recession. Dow notes that while government spending can stimulate the economy momentarily, it often creates inefficiencies.
So, does more government spending result in less efficiency in the private sector?
Yes, reduced efficiency translates into fewer goods and services for the public. What are the critical aspects of the H-1B visa debate?
Dow suggests that limiting foreign labor may hinder businesses' operational efficiency, ultimately damaging the economy.
But doesn't that protect low-wage American jobs?
That's the heart of it. Preserving jobs can lead to increased costs and decreased overall productivity.
Ed anticipates that continued spending patterns could lead to a market correction by 2025.
What indicators should we monitor as we approach that timeframe?
Observing government expenditure and private sector efficiency will be pivotal. In summary, it's essential to comprehend how government actions influence economic results.
Indeed, viewers should thoughtfully consider how spending choices affect their finances alongside the broader economic landscape.
Today, we're breaking down some stark realities from a recent episode featuring real estate expert Mitch Wechsler, where he and Travis tackle the critical issues affecting the economy.
Mitch highlights how the Federal Reserve's recent actions dominate the discussion, revealing why many believe it has lost control of economic indicators like mortgage rates.
A central theme of the discussion is that the Federal Reserve's recent easing of the federal funds rate has led to an unexpected increase in mortgage rates.
Mitch points out that while the Fed aims for a 2% inflation target, current market predictions place inflation around 2.38%, showing a clear failure in expectations.
This discrepancy raises serious questions about the Fed's effectiveness in ensuring economic stability.
Mitch clarifies that even with the Federal Reserve cutting borrowing costs, mortgage rates have surged unexpectedly.
This represents a harsh reality. For a standard loan, total repayment can exceed double the amount borrowed due to high interest.
As Mitch explains, inflation has severely impacted daily living costs, calling into question the Fed's effectiveness and purpose.
There's genuine concern that the Fed's policies might not only be ineffective, but could actively harm the average American.
Looking forward, Mitch anticipates a likely recession should current trends continue, warning of the urgent need for policy reform.
The key takeaway is that immediate and decisive actions are necessary to prevent further economic decline.
Ultimately, Mitch's insights serve as a wake-up call, stressing the importance for individuals to take control of their financial strategies amidst economic uncertainty.
Financial literacy and awareness are vital tools in addressing systemic issues that threaten collective stability.
Wow, what a fantastic lineup of insights we've explored today.
Absolutely. It's fascinating how each expert, from Mitch Wechsler to Jason Shapiro, painted a vivid picture of our current economic landscape.
Right? I mean, Mitch raised a crucial point about the Fed's role in driving up mortgage rates. It's a real head-scratcher.
And yet at the same time, Ed emphasized how governmental spending is what truly impacts productivity in the private sector.
Exactly. But here's the kicker. While Gerli is predicting a housing price collapse, Doomberg held a steady position on oil markets because of oversupply.
It's these differing perspectives that highlight the complexities we're facing. The consensus that we're in a challenging economic climate is clear, though.
If you found this dialogue enlightening, make sure to like, subscribe, and share to support our mission of bringing you top-tier financial content.
Your engagement helps us delve deeper into intriguing topics and connect with more experts like the ones we featured today.
And don't miss our next episode, where we'll delve into the intricacies of global trade dynamics and their significant impact on markets.
Trust me, you won't want to miss it. Thank you for watching.